Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, the ASX 200 hit another record last week. Gary Glover from Novus Capital says while it's potentially a little extended, he looks at history for a guide to the local market's direction. He goes back to 2005 when it exhibited similar moves.
Had a bit of a sharp pullback kind of mid-year, very similar to this pullback. Bounced back really fast back to the high and then tightened up just above the high, but really after going to a new high it couldn't really it didn't really pull back too much, and eventually it actually broke through the upside and kicked on and went for a bit of a run here. So if we fast forward to today, we've had a similar move here. We've had a pretty strong market. We've had that sort of sharp sell-off into the April low on the tariffs there, and we've bounced back so quickly. And then the last couple of months, so you've seen how tight that price action is, just sort of under the high. And yeah, we've just gone slightly above it here a few times, but each pullback got shallower and shallower, and then we've sort of popped through the top here. So some people might be thinking, oh, maybe we'll get a false break here and then pull back there. That's probably what the bears are hoping for. But normally if we get a little false break, you're only sort of going just a little bit further, not going a whole lot further here. So the fact that we've had a fairly strong move here and a fairly rigorous sort of jump here, is a pretty good sign there. We saw, it was funny that those employment numbers there on Thursday were pretty horrible, but that got the market excited about rate cuts, and that was enough for the market to take off here. So I think this looks pretty constructive here overall.
Well, in recent weeks we've seen money rotate into the cheapest stocks, particularly in the mining sector. However, Jonathan Takadina from MPC Markets is searching for opportunity just underneath that among small engineering companies, which he says offer compelling value. He first takes a look at Austin Engineering.
Austin Engineering, they're only trading at single-digit PEs at roughly about 6.5 to 7 PE, depending on which numbers you look at. And what happened was they took on a large order from two of the largest manufacturers. They kind of priced it too low, and that's why the market took the hit. But the thing is, they worked through that order. They've actually delivered on that, and it's just set them up for a really, really good turnaround. So what I've seen here is that Mark actually had Austin Engineering on the call, I think last week, and he said, look, I like the company. It looks cheap here, but he's going to wait till I see some signs of life technically, and it's starting to show some signs of life. So we actually recommended it to buy it up to about 38 cents a couple of days ago. It's trading roughly around that level now, and we just think the lows are in on this company. It's only trading at about a 220 million market cap, and the order book's even larger than that.
And elsewhere among the engineering small caps, Jonathan analyses NRW Holdings, which is down about 20% year to date, and CVL.
So another situation where once these engineering companies start trending higher, what you'll see is that they keep doing that. It could be just the nature of the business, but what happens is that when these companies win contracts, it's just recurring income, and it's a steady as she goes. And what the market's sort of catching on now is that these companies, they have large moats. It is a fairly low margin business, but the thing is, the revenue is quite solid, and they're not expensive at these levels, and that's why I think these trends can continue higher. So NRW trending nicely, and I think it's got more to go. So CVL, same thing. It gapped higher when I talked about it, and it's just continued since. So it's been a little bit more volatile than some of the other names, but it tends to do that because it works on much larger projects. And but the thing is, the trend's still there. Like we see a bunch of higher lows and higher highs, and I think it keeps going. Even though our market has pulled back a little bit today, these companies are still trending higher. So I think the lows are in on a lot of these companies. I looked all the way down the spectrum from the large caps all the way down to the mids and lows in this sector, and they all look quite healthy. They're not expensive, and I think that if that money keeps rotating out of the growth into the more value, these should keep rising.
And that's it for the week. This week's edition of the charts. To watch, join us for more technical talk next week. Happy trading.